Hi, this is Prince here. So we are going to see about gold now. So we know that the price of the gold has been skyrocketing high in the past few days, and we're going to see why this is happening and when to buy and so on. So right now in this spiking price of gold, whether we are supposed to buy right now or not. So there is two things. One thing is fear of missing out and the fear of losing it. So fear of missing out is some people do enter or some people do buy immediately because the price is going too high, and some people think, oh my god, the price is already so high, so whether do I need to buy right now, or the eventually if it is too high then it will go down in a couple of days or within weeks so that I can buy. So in this situation we are going to see when and what price we can buy the gold right now in this peaking spike of gold. So right now the gold is in a bull market. It is in a strong uptrend. So if we see in the couple of past few weeks actually, so from the month of October it's been like continuously rising and rising and rising and rising and rising. So let's see why this gold price is on fire. So the first reason is the economy cycle is on its top. So economy cycle, if it is at its peak, the price has to come down. I mean, the economy has to go down, or if the economy is down then the economy has to come up. So since it is in a peak right now, we are going to face a recession for the next 2 years or 3 years maybe. Depends upon the country and the government and so on. So yeah, the why this is happening, the economic cycle is actually cyclic in number of years. So if we see in the past history, the recession has been happening for like every 90 years. So we call this as a cycle, like a Fibonacci cycle, Fibonacci numbers, etc., etc. Let's not go in detail, but it's since it's going to happen in the upcoming days or in the upcoming years. So what's going to happen is the value of the money is going to go down. If the economy goes down, or if various political factors or any other factor, the value of the money is going to go down. So what an investor, or or people, or anybody, or hedge funds, or mutual funds, or anyone who wants to safeguard their money, what they'll do is they will start buying gold. The reason why they want to buy gold is, see, if the money value of the money is going to go down, then definitely I don't want to hold the money in my hand, or I don't want to keep the money in my hand, or I don't want to invest the money in some place where the value of my investment is going to go down. See, right now all the markets are at its peak. Almost every market in this world, many of the markets are crashing. The markets have started its crash already, and so an investor or companies won't keep their money in the shares because the investment value is going to go down. And on another side, if we see, the money value is going to go down. Let's say if I have $1,000 in my hand right now, and at the end of the next year, or in the end of another 2 years, if the value of if that $1,000 is going to go down, or if the $1,000 is going to decrease to $800 or $750, I would definitely not keep that money in my hand. So what people, investors and companies, or investment funds, what they'll do is they'll start putting their money into gold. They will start taking the money out of their investments and they will start investing in gold. So that is the main reason that the price of gold has been spiking so much high. So let's take let's just see the history. So if we see from 2000 and 2001, the value of gold was somewhere around $280, and it already peaked high in 2011. It went up to $1,830. So let's see about the recession that happened in 2008. 2008, it already hit a high. It was around $1,000, and then again it kept climbing, and then it had a very big fall. So after this fall, it was in a sideways. This whole area, what we are seeing is, it was in a sideways trend, and then now it has started to move up. So until where it can go up in a certainty is, it can go up to $1,900. It can go up to $1,900. So it right now the price is at $1,500. So in a way, right now the price of the gold is actually cheap. Even though the gold, if it has started moving up already, it is still considered cheap when we see the prices which has been in the past. So what we are going to see right now is, when can we buy right now. So to see this, we are going to use a tool, something called as Fibonacci. So what this will tell us is how the gold will react. See, the market is full of structures and numbers. So this numbers, whatever we just saw, the 1,900 and 1,500 right now, is it's like, once if it goes to 1,600, once it keeps climbing a new high, it'll come down to a low. So that's what will be happening in every up climbing. So in an uptrend, the price will go up, and then it'll come down a little, and then it'll go up and come down a little, and then it'll go up and come down a little. So if we see, the characteristic of gold is, whenever it climbs a new high, whenever it goes for a new high, it will come down to its 50% value. Whatever we are seeing, this the 0.5 is the 50% value of the high. So it will come down. See, it has eventually come up to 1,081. See, where is 1,900, and it has fallen down to up to $900. So from here, if the movement is up till here, then the character of gold is supposed to come down to its low for a 50%. And then what will happen is, this is what eventually will happen is, from here it will go up, and then it will come down to another 50%. So this is how market works. This is how an uptrend, or an upgoing price will work. And for example, if we see in a short term, see, this is in a history, we have almost taken up 18 years of history right now. But if we take the short term, let's just have a look at the recent prices. See, it's not only from there to here. For example, if we see from here to the high, wherever it has gone right now, it has to come down. It has to eventually come down. So how we are going to determine it's going to come down, or whether it is going to go much further up, or at where the prices will start to take a turn. So let's see in a shorter time frame. That is, I'm going to move the chart into a weekly time frame. So in this weekly time frame, every bar that you're seeing is 1 week. So let's say if we see this bar is 1 week, and this bar is another week, and so on. So the same tool that I'm going to use right now is, I'm going to take a low price in which the gold was, and then I'm going to take it to another high price. See, exactly at this 0.5 levels of Fibonacci, that is 50% of its value, has come down. That's how the gold works. That is the characteristic of a gold. So right now the current price is at 1500. So if we see the current week, the market is closed already since it's a Saturday. So this past 1 week the gold was falling, and even a week before the gold price was actually falling. So if we take this, see, we have considered a low and a high, and right now we can take this as another high, and then we can expect the gold to fall up till here, that is 1300. But it is very less likely to happen that gold can reach up to 1378, because it is in a strong uptrend. If you see the movement of the price in the month of May, in the beginning of no, sorry, April, May, in the month of June to August, the prices almost climbed up to $200, which is a very strong up move. So in a very strong up move, what we can actually expect is the price of gold to increase from this place to this place, and then we can expect the price of the gold to come to a minimum amount of 1477. What this area of 1476 is 0.236%. This 0.236% will act as a support for the price of the gold. So it has very less likely chance for the gold price to go below this. If it goes below this, it's well and good, you can buy more. But since you can, as you can see, the price of the gold is already taken a turn. It has already taken a reverse direction. I mean, it has already started to come down, in a very slight movement of price from around, let's say, around $50. Yeah, almost a $50 has started to fall. So it won't come down till here to buy again. It will come down a little. So every up move will go in a strong uptrend, and then it'll come and fall for some a percentage of amount, which we have seen is 0.5, and then again it will go up, and then again it will come down. So to be precise, we can actually expect the price of the gold to come down to 1416. So in this short term, we can expect a fall up to $100, or we can expect the price to fall up to 1477. So if the prices come up to 1477, you can definitely start buying gold. At that place, you can buy as much as you can, or you can once you start buying at 1470, excuse me, 1476, or you can buy at 1416. So these are the two price ranges where we can see the gold to react in the upcoming days. So why we have to buy gold is, one is to safeguard our investment or the value of the money, and also to buy the gold when it is cheap. So we don't want the gold to go for 1800 and then buying. So let's say if we have a marriage or anything, or if you want to have it as a personal use or as an asset or as anything, I think the correct time to buy gold is when it reaches to the prices that I have mentioned in this charts. Let's take a daily chart, how the gold has been reacting daily. So in daily, it has already started to take a U-turn from the high. It will come up to 1470s, or the prices I mentioned earlier, and then it will again start to go much further up. So that's the importance of gold I wanted to tell right now. See, and one more thing I wanted to say about gold as a currency is, because see, even If we take back the history and see, the gold was the first currency which was used, and later what happened was, businessmen or people or anyone who want to travel from one place to another place, they weren't able to carry the gold because it can be easily stolen or theft or so many things due to so many factors in history. What people start to do is they started to exchange the gold. For example, a person in London will go from London to Paris, and what they'll do is they will have a merchant in London that they will get a receipt from, and then they will go and exchange it with a person in a similar merchant in Paris. So it was no more gold which people were carrying. It was just the paper which people were carrying. So that's how the currency was born. That paper eventually started to become a currency, and every government had its regulation and restriction that a certain amount of currency only can be printed in every country based on their reserves, based on the gold reserve. Let's say if a country has 100,000 kilograms of gold, equivalent to that value only the currency can be printed. It was like that, but the group of nations and all the nations started to decide that to break that rule, so they started to print the papers as much as they want. So right now the paper of currency has no value. Before, the paper of currency was equivalent to the value of the gold. Based on the reserve, they can print as much as they can, but right now it's not like that. They are just printing ample amounts of papers which has no value. That's why the importance of gold is so much that we have to start treating it as a currency. Even during recession time, if we don't have jobs or if we don't have money, whatever the gold we buy right now, one thing, the price is going to go high, the price is going to go up, so we have something, some percentage in return, and also the value will be retained, and we can pledge it easily and take the money. Let's say if we have 10 grams of gold or 20 grams of gold, we can go and pledge it and take the money. So one thing, our money is going to be valued and safe if we shift to gold right now for the next 2-3 years. And also an asset class, we can have the gold forever. Thank you.